Hey, look at that. Phone rang right when we went live. How are you?
Perfect timing. I'm good. How are you?
I'm doing good. All right, we're not going to waste any time today. We're going to get right into this down payment assistance. It is something that we get pinged with these questions nonstop for only the 25 plus years we've been doing this. But this is a this is an important topic right now because seller concessions are becoming a big part of purchase transactions. There's no longer the overbidding going on, and sellers have to be creative to find ways to get buyers to be able to qualify to buy the home.
Right.
So when you hear the word down payment assistance, like that person calls you and they say, "Hey, I'm a first-time home buyer. Do you have down payment assistance?" What are you thinking when you hear that?
Um, I'm thinking that I feel for those people when they call, meaning that a lot of times you don't know what to ask for, and in the media, whether it's print, TV, or the even social media, the real estate industry sells a lot of hype and hope. And you have to get that message out there to pique people's interest. So a lot of times people are going, "Hey, I'm a first timer. What's the free? What do I get as a benefit? What does that mean to me? Tell me the good news. Tell me what discounts or how much better my scenario is going to be than somebody that's bought a home before."
How did we get to the spot where they think that they get something for free?
Uh,
Any
I don't know. I mean, I think a little bit of it is just human nature, right? You kind of
Okay.
hear what you want to hear, and you know, I'll blame the mortgage industry. When we get to times like this, now the filters in the loan program start expanding to make up for the lack of volume or applications being taken. So our industry does a really good job of making the somewhat ordinary try to come across as extraordinary.
Okay. So first timers, down payment assistance, first timers, the first thing you think of is uh, you know, not a lot of experience,
I'm the
financial.
point for, yeah, first timer. We're thinking, all right, have they established enough credit, and how much money have they saved up? What are we really working with? Those are usually the first two things that come to mind. Um, as if you were to, I wouldn't say generalize, but first
Yeah.
timers, that's usually a stumbling block, is one of those two.
Oh, but what's this down payment assistance and can I get money for free? They're going to go right into that.
Yep.
And there is no free lunch at all when you're trying to purchase a home, ever. There is pain involved in some capacity. But let's talk about the down payment assistance. We always strive to have the person put 3.5, 5% down at minimum. That's what we're shooting for. Now, if they can't come up with those funds, we've got to look at different avenues of where they can come up with the funds, whether it's from a relative or borrowing money out of a retirement account. Believe it or not, we have first timers that have retirement accounts that they can take monies from, or this DPA. Let's talk about the DPA. Tell me what you know about it, what we need to know
Um,
about it.
Yeah, so there is an option out there that allows you to get the 3 or 3.5% down payment from a lending institution. Um, so instead of borrowing it from your 401k or borrowing it from a family member, you can get those funds from the bank that you get the bulk of the big mortgage or the main mortgage from. Usually they split that into two different categories for the down payment assistance. One would be something that may be forgivable over time. And then the other is a repayable, we'll call it a second mortgage that sits in place. So back to your point, there's no free lunch. There is an obligation, whether it's timely payments in a period of time or actually a second loan that's repaid at the same time.
Okay, so let's go the first option. Lenders helping contribute towards your down payment. Again, there's no free lunch there. What's the catch?
All right. So the catch is if you can come up with your own down payment, the interest rate on that mortgage is going to be close to 1% better than the interest rate on the mortgage if you need the down payment assistance.
All right, so I'm not gonna put you on the spot, but you're financing it, you're financing your down payment through a higher interest rate, so you're paying more each month.
Yes.
Again,
And the
this
part
could,
that, yeah,
go
this
ahead.
is the, if we kind of go back to what you started this with, right, of the down payment assistance, man, there is nothing wrong with it. It's just, I don't know how much right there is. So in these conversations, it's relevant to get people interested or excited or get them in a position where they can listen about embarking in the home purchase process.
Good luck with that. Ken, you are a mortgage whisperer.
Touche. But once we get into that and we say, okay, let's look at a loan where you do come up with that down payment and a loan where you use the down payment assistance, it's about 10 out of 9 times the people migrate towards finding a way to come up with the down payment. And many times in these conversations, they're like, well,
They're
I
trying
have
to
the
keep
money.
payments low.
Yeah, I
They're trying
have
to
the
keep,
money. I just thought if I could get it for free or it wasn't going to cost me any incremental difference, why wouldn't I do it? And hey, that's fair.
this is no different, comparing a refinance 30-year fixed, no cost loan versus a 30-year fix if you want to buy points. So we're going through the same spreadsheet, comparing break-even periods on these monies that you would be getting from the lender in the form of a higher rate. Same concept, correct?
It is.
Okay, so that
just
listening,
which period of time is more relevant? The
that
right
listening
now.
component's tough as I'm talking right over you. But seriously, I know what you're saying. You're struggling to get them to engage in the conceptual, whether they get money from mom or dad, or they get the money from the lender and pay a higher rate. You got to really get their wheels cranking. It's not just okay, they're going to give you the 3%. You're good, and you're off and running. That's not how it works.
Well, it's not the way it works with us. Maybe that's different at other places, but I know if I were embarking into that, I would want to fully understand, hey, if there's a premium to be paid to not come up with that, I would want to know what that is. I'm not so sure that other places do that, but that's okay. I mean, I just know that whenever we start talking with somebody, I can't tell you how many times they go, I don't have any money and I don't have any family members that are going to help. And then 2 weeks later, well, I was finally talking to my parents and they said they'd contribute or they'd be in a position to help out. So that's why I say this program, to me, the cool part about it is it allows people to take the next step and get further into the process instead of just pushing it off and saying, I don't want to think about it. I don't want to talk about it. So that's why I'm excited about it, just because it allows people to take it in and get to the next step instead of ignoring it entirely.
So you folks out there are going to hear all kinds of programs through the state, through the lender. There's a gazillion of these things out there. You want to stay away from the ones that are using second mortgage, meaning it's tied to your house and it kind of restricts your movement from improving your situation 1 or 2 or 3 or 4 years down the road. That's a tough one, especially when we believe values will probably be going down as opposed to going up over the next 24 months. So we're trying to incentivize you by saying, if you come up with this, here's what it could look like 2, 3, 4 years down the road, and you'll be even in a better position, and you're going to have equity, and you're going to be able to move about much more freely with options as opposed to being stuck.
That in the last 2 weeks with regard to these, we'll call it down payment assistance options, that they've just been crushed because mortgage rates in general have gone up. And that causes some challenges for us on the mortgage side of how we can actually provide benefit to the consumer. There's some limitations now. So now it's even more expensive to do the down payment assistance stuff than it was 4 weeks ago because of the
Well,
crazy
it makes
rate
sense.
environment.
It makes
Yes.
sense. They believe values are coming down. And that's
Yeah,
going to
so
cause, if you have no equity in your home and the values are going down, the bank's in a precarious situation.
that and lender rates are high. Mortgage rates in general are the highest we've seen in a while. The industry believes that rates may fall in the future, so they don't. Some of the extra compensation that could be applied towards the down payment assistance isn't being offered because they're fearful these loans will refinance in a short period. It's just a mess right now on the mortgage pricing side, which is affecting all of these options. If we go back though, the premise of this is it's a great conversation starter. It's a great way to spread, hey, there's hope, even if you don't have a bunch of money saved up. Hey, and it really makes sense to speak to a mortgage professional that's local and in your area so that you can understand all of the options, the goods, the bads, the uglies.
All right, guys, like, subscribe to the video, share this with anybody, but more importantly, questions, just ping us. We'll get
Please
back
do.
to you. We'll walk through it. Have a great day, Ken. Good job.
DPA all the way.
See ya.
Later.